Welcome to our inspiring documentary about the life of Benjamin Graham, one of the most influential investors and financial theorists of all time. Known as the father of value investing, he has inspired generations of investors and financial professionals, including the famous Warren Buffett. Join us on a fascinating journey through his life, from his early challenges to his legacy as one of the greatest financial thinkers of the 20th century.
Insights for the Informed Investor.
Chapter 1. The Early Years. Benjamin Graham was born on May 8, 1894, in London, and immigrated to New York City with his family at the age of 1. Despite initial financial stability, circumstances changed when his father died, and the family fell into poverty. These difficult experiences deeply shaped Graham and fueled his desire for financial security and stability. Graham was a brilliant student and received a scholarship to Columbia University. There, he impressed his professors with his exceptional intelligence and analytical thinking. He graduated with top honors and was inducted into the Phi Beta Kappa Society, an honor given only to the best students. After graduation, Graham received several lucrative job offers, but decided to begin a career on Wall Street to apply his knowledge and practice and realize his full potential. His early experiences in the financial world taught him important lessons about the unpredictability of the markets and the importance of solid analysis. These experiences laid the foundation for his later philosophy of value investing. Chapter 2. The beginning of a career on Wall Street. After his studies, Graham began his career at a small brokerage firm and quickly rose in the financial world. He made a name for himself as a sharp analyst and developed a method for valuing stocks that differed significantly from the speculative practices common at the time. Graham believed that a stock was worth more than its current market price if the underlying company had solid fundamentals. He focused on finding companies that were trading below their intrinsic value and developed systematic approaches to stock valuation. In 1926, he founded the Graham-Newman Corporation with Jerome Newman, one of the first investment funds. The Graham-Newman Corporation was unique in that it was based on a disciplined value investing approach aimed at identifying undervalued companies and maximizing their potential in the long term. In the years before the Wall Street crash of 1929, Graham achieved great success and generated significant profits for his investors. However, the crash and subsequent Great Depression hit him hard. Many of his investments lost significant value, showing him the brutal reality of market volatility. These experiences reinforced his belief that careful analysis and a margin of safety are crucial for long-term success in the markets. He recognized that risk can never be completely eliminated and that protecting capital must be a top priority. Chapter 3. The development of value investing. Graham's most important contributions to the financial world came in the years following the Great Depression. After witnessing the devastating effects of the crisis, Graham recognized the need for a new, rational approach to investing that was not driven by speculation and greed. He developed the principles of value investing, a strategy based on the idea of buying stocks that are trading below their intrinsic value. This intrinsic value is determined through a detailed analysis of a company's fundamentals, including its balance sheet, earnings, assets, liabilities, and future prospects. Graham emphasized the importance of the so-called margin of safety, a buffer between the current market price and the intrinsic value of the stock to minimize risk for the investor. In 1934, Graham, together with David Dodd, published the book Security Analysis, which quickly became a standard work for investors and had a lasting impact on the investment industry. In this book, they laid out the basic principles of value investing, including the importance of the margin of safety to minimize losses and the necessity of thoroughly understanding a company's fundamentals before making an investment decision. The book also emphasized the importance of discipline, patience, and a rational approach to ensure long-term success. These principles represented a radical break from the speculative practices that were prevalent at the time and laid the foundation for a new way of investing. The concept of the margin of safety was particularly revolutionary, as it helped investors protect themselves against the unpredictability of the market. Graham and Dodd argued that even the most careful analysis could never eliminate all risks, as the market often reacts irrationally and events are unpredictable. The margin of safety, therefore, provided a strategy to limit losses while still seizing opportunities. This principle would later become the foundation for many successful investors, including Warren Buffett, who called it the most important rule of investing. Security analysis was not just a book, but a movement that shifted the focus of the financial world from short-term speculation to long-term value. Graham and Dodd conveyed the idea that an investor is not defined by the short-term market price, but by the ability to recognize the true value of a company. These principles inspired a whole generation of investors who sought a more disciplined and scientific approach to building sustainable wealth. The book remains an indispensable reference for serious investors looking for a solid foundation for their investment strategies. Chapter 4. Educating the next generation of investors. In addition to his work as an investor and author, Graham was also a passionate teacher who wanted to pass on his experiences and insights to the next generation. In the 1920s, he began teaching finance at Columbia University, where he became a fixture in the academic environment. His lectures were not only popular among economics students, but also attracted practitioners who wanted to benefit from his knowledge. Graham was known for his pragmatic and hands-on teaching style, which was based not only on theoretical knowledge, but also on his personal experiences as an investor during difficult times like the Great Depression. A special aspect of Graham's teaching was his ability to convey complex financial concepts in a simple and understandable way. He emphasized the importance of fundamental analysis and taught his students how to determine a company's true value by closely examining its financial metrics and economic situation. But Graham's teaching went far beyond theory. He also conveyed to his students the importance of discipline, patience, and emotional control in investing, qualities that are essential for success in the often volatile world of the stock market. He taught his students that emotional decisions often lead to mistakes, and that rationality and composure are the keys to success. Warren Buffett, one of Graham's most famous students, later described him as his most important mentor and the person who shaped his entire investment philosophy. Buffett often said that Graham not only taught him how to invest in companies, but also how to be a person of integrity. Graham placed great importance on ethical behavior and integrity in business. For him, the success of an investor was not only measured by financial gains, but also by how those gains were achieved. Graham's philosophy of rational investing and a long-term perspective shaped the thinking of many of his students, who later became successful investors themselves. He taught that the goal of investing is not to achieve short-term gains or beat the market, but to build long-term value and create financial security. His influence on Warren Buffett and many others meant that his principles were carried forward far beyond his own lifetime. Buffett often called The Intelligent Investor the best book on investing ever written, and many of the principles Graham taught his students are still fundamental components of modern investment theory today. Graham's commitment as a teacher created a legacy that has inspired generations of investors to apply the principles of value investing and pursue a rational, disciplined approach. Now, Chapter 5. The Impact of the Intelligent Investor. In 1949, Graham published his most famous work, The Intelligent Investor. This book is still considered one of the most important treatises on investing and is a must-read for anyone looking to invest in the stock market. It was written to provide investors with a guide to understanding the markets with a clear, analytical approach, rather than acting on emotions. In this book, Graham introduced the concept of the margin of safety, which states that investors should always have a buffer between the purchase price of a stock and its intrinsic value to minimize risk. This concept of the margin of safety is one of the central elements of Graham's investment philosophy and has stood the test of time. It helps investors navigate the unpredictability of the markets by allowing them to maintain some level of security even in uncertain times. Another key concept that Graham introduced in The Intelligent Investor was the distinction between the defensive investor and the enterprising investor. The defensive investor, according to Graham, should focus on safe, stable companies and diversify their holdings to minimize risk. The goal is to achieve a reliable return without taking unnecessary risks. The enterprising investor, on the other hand, is willing to put more time and effort into analyzing companies to find attractive opportunities that the market may have overlooked. This distinction helped investors better understand their own risk tolerance and investment strategy and act accordingly. Graham also emphasized the importance of distinguishing between investing and speculating. For him, investing was the process of careful analysis, building long-term value, and using a margin of safety, while speculating was the attempt to profit from short-term market movements. Graham strongly warned against following the herd or giving in to emotional impulses, instead recommending a disciplined, analytical approach based on rational decisions. The Intelligent Investor was a great success and changed the way people thought about investing. It conveyed the idea that successful investing must be based on rational analysis and discipline, and that short-term gains should not be the goal. Instead, investors should strive to recognize a company's intrinsic value and build long-term wealth. The book inspired generations of investors, including Warren Buffett, who called it the best book on investing ever written. Graham's teachings on the importance of the margin of safety, discipline, and separating emotions from investment decisions still have a major impact today and provide investors with valuable guidance in an often chaotic and emotionally driven financial world. Chapter 6. The Legacy of Benjamin Graham. Benjamin Graham retired in 1956, but he remained an influential figure in the financial world. He devoted himself to writing and traveling, and stayed in close contact with many of his former students and colleagues. His legacy lives on in the principles of value investing, which are still applied by millions of investors worldwide today. Graham's influence extends far beyond the financial world. His emphasis on rationality, patience, and a long-term perspective helped transform the culture of investing. He demonstrated that success in the stock market is not achieved through luck or speculation, but through solid analysis and a calm, disciplined approach. His value investing approach continues to form the basis for many successful investment strategies, and his writings remain an important resource for investors seeking a proven path to long-term wealth. His most well-known student, Warren Buffett, played a major role in spreading Graham's philosophy and furthering his teachings. Buffett has repeatedly emphasized how much Graham's principles influenced him, particularly the importance of the margin of safety and the focus on a company's intrinsic value. Thanks to Buffett and many other investors inspired by Graham, value investing remains a fundamental component of modern investment theory. Beyond his contribution to financial theory, Graham was also a role model in terms of ethical behavior and integrity in business. He taught that an investor's success is not only defined by financial gains, but also by the manner in which those gains are achieved. For Graham, it was crucial that investors act responsibly and always keep the interests of their clients in mind. Thank you for joining us on this journey through the life of Benjamin Graham. His teachings and principles remain relevant today and provide valuable guidance for investors in an often turbulent financial world. If you enjoyed this video, please give us a thumbs up and subscribe to our channel for more inspiring stories from the world of finance and investing.